This podcast channel is about you, successful international entrepreneurs, successful expats, successful investors. Sponsored by HCJ Contacts.
All right. So, thank you everybody again for joining us. My name is Derren Joseph. I run a semi-autonomous tax team within a practice called Moores Rowland, and we have about 30 offices across 12 countries, I think that will be. So we're based primarily in Asia. So my team officially sits in Asia. So we are as far north as Tokyo and Beijing and all the way down to Australia. And I sit in Singapore. I've been based in Singapore for the past 7 years or so. I'm not in Singapore right now. I'm actually in Lisbon, Portugal, so next door to you guys, assuming that most of you are in Spain. I know some of you are still in the US and elsewhere from the messages that we've got. Welcome. Now, because I am licensed by the US Department of Treasury, I am, of course, legally required to say, and you know how it goes, nothing we say here should be construed as advice. We're having a general conversation about general principles. Anyone who thought, I'm going to show up with pen and paper, and at the end of an hour, I'm going to figure out how to do my tax returns. Nope, that's not how we work. Sorry to disappoint you. It is a general conversation, and nothing should be construed as us encouraging you to pay less than your fair share of taxes. And of course, we have it there in writing. No one should get advice other than from someone who knows their situation inside out. So, and whom they have retained for that purpose. So I'm gonna come back to these two guys because when people ask, hey, if I'm not like 100% compliant with my taxes, what's going to happen to me? These two guys are brilliant case studies in what happens when you're overseas and you're not quite 100% with your US taxes, but we can come back to that. These are the takeaways. I'm going to talk about citizenship-based taxation, and then I'm going to talk about the mechanism that the IRS or the US government in general has for keeping track of US taxpayers abroad, which is primarily something called FATCA. So that's really important to understand because that's how they find out what you're doing. And then I'm going to talk about your basic responsibilities. I'm going to touch on stimulus payments. I'm just going to touch on it really, really lightly. And then we're going to jump over to Ricky's side of things. So citizenship-based taxation, what does that mean? So the US officially is one of two countries in the world that has citizenship-based taxation. What that means is that even though you reside outside of the US for years and years and years and years, you are still a US taxpayer once you have that US passport or you have a green card. But that's the official line. Unofficially, lots of other countries do it, including many European countries. There are scenarios where even though you are not living in whatever European country it is, including Canada, including Australia, New Zealand, even Singapore, which is supposed to be a tax haven. There's situations where if you're a citizen or a resident and you're not there, you can still be dragged back into the tax net. But for the US, it is perhaps pretty much impossible to get out of the US tax net unless you give up your citizenship, unless you give up your green card, which our practice does. We do 2 or 3 people each month giving up their citizenship or their green card. Then people ask, you know what, how is the IRS going to figure out what I'm doing? And the answer is FATCA. There's a lot of misunderstanding around the Foreign Account Tax Compliance Act. It's not a tax, and some people seem intent on describing it as such. It is not. It is a framework for information exchange. So what the US government has done is gone around the world and signed bilateral agreements with countries all over the world, obviously Spain, but countries that you would not have thought that may sign, like China or Russia. Basically, everyone has signed this except for maybe North Korea, Cuba, Iran, people who have real issues with the US. Everyone else has signed. And what it means is that they have basically created an exception to their local bank secrecy rules. And they have also passed legislation to mandate or require all domestic financial institutions to go through their books and identify anyone suspected of being a US person. Like many of you, I have more than one passport. Many of you do as well. It's pretty typical these days. So even if you were to rock up to your local financial institution, and that not just includes your banks, it could be like a broker, it could be, you know, any one that sells financial products, certain pensions, certain insurance, whatever. And even if you were to declare that you're not US and you give another passport, if that financial institution suspects that you are a US person, even if you deny it and they suspect that you are, and the law goes into certain industries, they are required to report you to Treasury. So that's how it works. That's the check and balance in the system. US, you know, being a US person, we mentioned passport, green cards. Substantial presence is a big deal because of the health crisis that we're all going through right now. Many people have been stuck in the US for longer than they originally intended to because of flight issues, travel restrictions, and they inadvertently may become US taxpayers because they hit substantial presence. We also deal with accidental Americans. These are people born to at least one US parent, even if they were born abroad and never registered their birth with the embassy. They don't have a social, they don't have a passport. They still are US persons. And we can also touch on, if anyone wants to jump into that later, we can touch on those who are married to a non-US spouse. For example, you marry a Spanish national who has no connection to the US aside from marriage, you can elect for them to be treated as a US taxpayer. If there's interest in that, we can go into how that could be to your advantage. But basically, these are the ways in which you may become US exposed for tax purposes. And the responsibilities that come with that, tax, right? Income tax, which includes capital gains. If you sell real estate, if you sell anything anywhere in the world, or you generate income anywhere in the world, you will be subject to income tax. But everybody knows that. I'm not telling you anything new. But what may be less well understood are the transfer taxes, i.e. the gift taxes and the estate taxes. And if you're married to a US citizen, the gift tax is less of an issue. But for those in relationships, boyfriends, girlfriends, husbands, wives, partners, civil partnerships, whatever the case may be, and your partner is not a US person, receiving a gift from them above a certain threshold or gifting them an asset over a certain threshold, that does create at least a reporting requirement to the US government. And failure to report a gift is up to 30% of the unreported value of that gift, you know, the unreported gift value. So please, heads up, pay attention. And I know it's a bit morbid, but estate taxes is something to consider as well. If you're still US domiciled, it will be your worldwide assets that will be subject to the US estate tax. If you're not US domiciled, and we can get into that later if there's questions around it, then it'll just be your US citus assets, which will be subject to US estate taxes. Somewhat counterintuitive is the reality that you may think, hey, the IRS cares about one thing, getting paid. Like, file your taxes, give us some money. No, actually, I mean, it may come as a surprise, but no. The IRS, as is evidenced by the penalty schedule, you know, what do they actually go after and how onerous are the penalties? What you will find is that they're actually more interested in information. It's all about data. So, okay, you don't pay your taxes, okay, interest and penalties, but we're in a zero interest rate environment. How much is that going to be? But you don't report your bank account in a bank in Spain, it could be up to 50% of the balance that's not reported, plus jail time. So, you know, why it's just so happened that ever since 9/11, with the Patriot Act and some other pieces of legislation, the US government has been more aggressively pursuing information than just tax revenue. So what I want you to take away from this is make sure and file all the requisite paperwork, even though there's no tax due. Provide the information, because failure to provide information could be, pursued pretty aggressively. All right. And here's a little acronym that we use for U.S. taxpayers that are abroad. Do your best. So B stands for bank accounts, but as I already mentioned, that includes financial accounts. It includes unit trusts. It includes ETFs. It includes mutual funds. Anything outside of the U.S. as a financial account. Certain pensions. It includes certain insurance policies where there's a cash surrender value, where there's cash in the policy. So financial accounts, but B, banks. Make sure to report them. E, estimated tax. The IRS is impatient. They do not like to wait until the following April to get their taxes. When you were back in the US, you got paid on a W-2, which was subject to withholding every month as you get paid, or fortnightly, depending on how you got your money. The IRS expects the same when you're not there, right? So they want at least quarterly payments. Failure to provide quarterly payments, if they're due, will be subject to underpayment penalties. So please estimate your taxes. S, state issues. Remember that you have 50 different states, 50 different rules, but most states are domicile states, which means that you need to often take very specific action to break domicile with your state. It varies by state, but please speak to your your tax expert, your tax qualified tax professional, to make sure that you don't have any surprises waiting for you when you get back to the US. Because people say, well, I'm in Spain, I'm in outside, what are they going to do? Probably nothing. But at some point in time, you may return home, you may return to the US, and that's where you have a big surprise waiting for you in the form of a huge tax bill. And we've had to help clients deal with that in the past. It's not nice, it's nasty, and it's really a hassle. Avoid it if you can. And T, transfer taxes, which we mentioned before. Again, it's unlikely, especially with gift taxes, that there would be any payments needed, but just the reporting. Remember, it's about, with the US government, it's information. They want information. So give them the information, fill out those gift tax returns. Do not create problems for yourself. Estate taxes, that is one form of taxation that lends itself to proper tax planning. You get yourself a great estate tax professional who can help you work around that. I know it's a bit morbid, but it's better to get in front of it than create problems for your loved ones when unfortunately you do pass on. I'm going to touch really, really briefly on stimulus payments. Why? Because for the vast majority of US persons outside of the US, aside from the stimulus payments, the other aspects of the CARE Act and the other loans and the other incentives really don't apply. Generally speaking, for some people, of course it does, but generally speaking, it's just about the economic impact payments, which is what the free money is called. So we had a first round last summer, which was around $1,200 per taxpayer. And earlier this month, we had $600 per taxpayer. So this is all you needed. You needed a social. There's some people that don't typically file returns and whatever. The point is that the Q&A on the IRS website is pretty comprehensive. So it's unlikely that any question you have would not have been answered by the IRS website. If you did not receive the stimulus payment from last year, you can claim it as a credit on your returns. The returns that we're doing right now, the Form 1040 has been amended slightly to have a space for these stimulus payments. So if you received it, you declare it, and that's fine. It's not taxed. They just want to make sure you got it. If you did not get it, you can make that declaration and you will get a credit on your taxes. What does that mean? If you're due a refund, now you'd be due a bigger refund. If you have a tax liability, the tax liability will be reduced by the amount of the stimulus payment. So you may just make sure that if whoever you're working with remembers the stimulus payments component of it. And as I mentioned, the website is pretty comprehensive. Have a look. Everything is there. In terms of filing requirements, they change. Sometimes they change every year, so it's always worth having a look. And if you think, well, I don't make enough or whatever, depending on what your filing status is, the threshold for filing a return is as low as $5. So if you made more than $5 last year, you should have a look and speak with your tax professional and just make sure that you file a return if it's needed. So it's just something to keep in mind. Most of our clients are higher income earners. And so as a result, most of the questions we get aren't whether they need to file, but why they didn't get a stimulus check. And 9 times out of 10, it's because our clients earn too much. And I guess it's just the price of success, because as you can see, there are certain phase outs. So depending on what your filing category is, or your filing status is, it begins to phase out. And the amount is reduced until you get nothing. So if it is that you are a higher income earner, like our typical client, it's something to bear in mind if you're kind of scratching your head wondering, where's my check, right? So, and I'm gonna hit the pause button on the Q&A. Please, there's a chat box below. You can write your questions there. And after Ricky is finished with the Spain side of things, we will go through the questions that you ask in order. So with that, I will stop sharing. And Ricky, over to you.
So my name is Ricky Guiterres. I'm from Guiterres, Pujadas and Partners. We are Spanish-based firm, international accounting, tax, and legal firm in Barcelona. We are basically focused on international clients. So basically, I'm going to be talking about taxes for expats in Spain, and I'm going to go over through all the taxes in Spain. Yeah. So the first thing, how the Spanish tax here runs. Basically, in Spain, you have two different things. You have state tax and region tax. You have to be careful because the taxes might differ depending on where you're residing, where your region at. For example, the taxes are different if you're living in Catalonia or you're living in Madrid. Severe fines and penalties can be incurred if you fail to file your taxes. So it's very important that everybody knows how to file them or has somebody that can file them for them. Given that Spain has become a very popular destination for expats, understanding the Spanish taxes is vital. Spain is it has so many benefits for people from outside Spain because we have double taxation treaties with over 100 countries, which that's very, very beneficial. The two most important taxes for individuals are the income tax and the wealth tax. Okay, one of the most important things, when do I know if I'm tax resident in Spain? There are basically 3 rules. With these 3 rules, we can know if we are tax residents or not. The first rule that we have to confirm is if you have spent more than 183 days in Spain within a single calendar year, regardless of whether you are formally registered. If you don't comply this rule, we would go to the second one, which are your primary activities, if they are conducted in Spain or not. And the third one, if your main interests are in Spain, for example, if your spouse or children are still living there and they are dependent on you. The income tax. The income tax in Spain is basically one of the most important taxes. The Spanish tax residents pay income tax on their worldwide income. Non-residents only have to pay taxes on their incomes generated in Spain. Of course, you can have deductions on those on that income, and the income tax rate for non-EU non-residents it's a flat rate of 19%, and for the world non-residents it's 24%. The income tax can be divided in two different categories: the general activities and savings. Of course, as I mentioned before, depending on the region, you can have special regimes, such as regions such as Navarra and the Basque Country. They have special regimes and they pay to their own tax system. The Spanish, one of the important things to know is that the Spanish income tax, depending on the incomes that you have, it can go up to 54%, which is pretty high. Now we're gonna go a little bit deeply into the income tax from the savings. The income tax from the savings are basically incomes that come from interest, dividend payments, incomes from life assurance policies, from annuities, gains made from the disposal or transfer of assets. Since 2016, the income tax rate of savings are, as you guys can see, the following: incomes up to 6,000, you have a rate of 19%. Income from 6,000 to 50,000, it goes 21, and over 50,000, it goes 23%. The important part now, it's the Spanish, the general income. This income is it's basically your income from employment, the salary, pensions, rent, and this income, it can go, you will pay from up to 12,450, it's 19%, until 20,200 is 24, 35,200 is 30%, 60,000 37, and incomes over 60,000 45. But of course, depending on the region you're at, it can be higher than 45%. As we mentioned, for example, in Catalonia, it can be up to 54%. So that's just like a general, those are like general rates. Some personal allowance and deductions that you can have based on your personal situation. Spanish tax residents, they have personal allowances, while non-residents, they don't. You can have allowances if you have in your family people, like if you have in your family and living with you people over 65 years of age. You can have more allowance if it's over 75 years of age. And if you also have children that are underage or under 25 and they are living with you, you can also have deductions from that. Now, the Spanish wealth tax, which is pretty important too. Basically, this tax, it's designated for people who hold significant worldwide wealth, who hold a lot of money. They declare assets after a tax allowance of 700,000 euros. In Catalonia, the tax allowance is up to 500,000. But if you're living in Madrid, there's no wealth tax. That's the difference between some regions and the other ones. Maybe in some regions you have more benefits regarding one type of tax, and maybe in some other regions you have more benefits regarding other types of tax. For example, for your primary residence, you have 300,000 more of tax allowance. And the tax rate goes from 0.2% to 2.5%. Okay. Now, the Form 720. The Form 720 is basically like an informative form. It's a form where you state, or it's an overview of the individual's worldwide assets. Individuals that come to live in Spain and become Spanish tax residents have to declare all their assets that are worth more than 50,000, sorry. They have to declare these assets in this form. But as I mentioned, it's just informative. A lot of people fail to do this thing whenever they come to Spain. And then when they have to declare those assets somewhere else and they haven't filed this form, then the Spanish tax authorities would come after them and they would have to pay some fines and incur high penalties for not declaring these assets. The Spanish property tax. Owning a property and living in Spain, in there from January 1st, you are subject to IBI. It's in Spanish, it's translated Impuesto de Bienes Inmuebles. This kind of tax, it applies to both residents and non-residents, and there are also some other property taxes such as rubbish collection tax. And when, for example, when you're selling a property, you're also taxed with transfer tax. Capital gains. The Spanish capital gains tax rules are not really straightforward. It's tax on profits from selling properties or other investments. Tax residents pay capital gains on the disposal of their worldwide assets, as mentioned before, while the rates are from 19% for the first 6,000 profit, 21% from the range from 6,000 to 50,000, and 23% for 50,000 upwards. For non-tax residents, they pay Spanish capital gains on all the gains made by the sale of a Spanish property, okay? Only for their incomes or the gains that they have in Spain. And of course, it's a flat rate of 19%. Yeah, Spanish capital gains, it's easier for non-residents rather than for residents. Now we come to corporate income tax. Nowadays, the corporate income tax is 25%, but maybe in the future, with the current government that we have, they want to put it higher, up to 30%, but we'll see. The newly formed companies, they pay 15% instead of 25%. They pay the 15% for the first 2 years. The Spanish tax year, it goes from January to December, and the corporate tax, it's paid the 25th of July of the following year. Now we have the inheritance and gift tax, which is a pretty complex tax. Individuals are subject to tax when they transmit or they give assets. Tax resident can be taxed on their worldwide assets, but not, as mentioned before, of course, non-residents only on their Spanish assets. You can also have reductions based on the degree of kinship. For example, if you are giving something to your son, you might have a lower tax rate than if you are giving something to a person that you don't know. You can have some pretty high reductions, but it's a pretty intense and pretty difficult tax. And finally, I'm going to talk about a special regime for foreigners, which is called the Beckham Law. This law was incorporated in Spain where because of the famous soccer player David Beckham. Most of you probably have heard of him. The Beckham Law, it enables foreigners who move to the Spanish territory to pay a flat fee of 24% on the incomes they obtain in Spain, instead of having a progressive tax of their worldwide incomes that goes from 19% up to 54%. There's this flat rate of 24% is up to an amount of 600,000, and then you would have to pay 45% or more if you are over the 600,000 euros. This law, you can only use it for the first 6 years you're in the country. After that, you would become Spanish tax resident, and you would have to pay taxes based on the progressive line. The main requirements for the Beckham Law is that the expat can have been resident in Spain for the past 10 years. The foreigner must have a job contract and signed by a Spanish company. If it is a director, it cannot possess more than 24% of the company. And of course, the course of the worker's professional activity must be in Spain. And that's it. If you guys have any questions, we'll be glad to answer them.
Okay, and I see that we do have lots of questions. So what we'll do, oops, okay. I'm going to, where is it? Participants, start in order. I'm going to scroll all the way back up to the top. And so someone has asked about Section 6013G election. So this allows someone who is married to a non-US spouse to elect to have them treated as a US taxpayer. And you may ask, that's bizarre. Why would someone ever want to bring a foreign spouse into the tax net? There are a number of reasons, but the two main reasons that we see with our clients are tax. So as you would know, for whether we like it or not, the reality is that the US tax code favors married couples over single. So if you file separately versus married jointly, you would face a heavier tax burden filing as married separately as opposed to jointly. So depending on the situation of your non-US spouse, it may be you may save money on taxes, and depending on your income level, we've seen clients save 4 or 5 figures simply by electing to file jointly. So it's a scenario that we run with clients to see whether it works to their advantage or not. And the second reason is part of just immigration planning, pre-immigration planning. This is for couples, so US, non-US, and the intent is at some point in time to sponsor a green card for the non-US spouse and for them to both live in the US. As you know, when you land in the US and you have no credit history, you can't do anything because you're off the grid, basically. I mean, getting a cell phone plan or leasing a car or rent an apartment, that spouse is completely, they face an uphill battle until they're in the system. Now, if it is that you make a 6013G election ahead of time, like a year or two ahead of time, then they are filing a tax return, they get a tax ID, they get into the system, they can prove their income in a way that US creditors will understand. So it's part of a strategy for pre-immigration, as in immigrating to the US, and it could be a tax benefit. So that's why. Next question. If I haven't filed 2019 or 2020 in the US, I live in Spain, can I still get the stimulus checks? Yes, you can, but then that's you raising your hands and telling the eyes, hey, look at me, look at me, look at me. I'm here, I'm here. So if it is that you were supposed to file a return, but you didn't, you would, rather than just going onto the IRS portal and kind of raising your hands and drawing attention to yourself, you may want to file a tax return. If a tax return is due, one should be filed. And even if a tax return is not due, remember that one of your responsibilities is declaring foreign assets. Chances are you probably have a bank account in Spain. So just make sure that like you're 100% aligned, or everything is 100% compliant. And if you genuinely have no need to file a return, then absolutely go to the portal and register yourself to get a stimulus check. If a return should have been filed, please file a return. There is a program which is amnesty in all but name, called the Streamline compliance procedure. What that allows you to do is to do the last 3 years, sometimes 4, sometimes 5, but basically 3 years, and the last 6 years of FBARs. And the IRS says, okay, you've come to us before we've come looking for you. And in return, because we're going to give you something as well, we will waive penalties, civil and criminal penalties. We'll charge you interest if taxes, but you live in Spain, so chances are no taxes are due. But you come to us, we waive civil and criminal penalties, and we turn a blind eye to everything that happened outside of that look back period. So the look back period is 3 years for returns, 6 years for FBARs, and then you're good, and you're good going forward. So if it is that you have not been compliant, that is perhaps a strategy that you should look at with your preferred tax advisor. Next question. If I do earn less than the foreign earned income exclusion and have no income tax liability in the US, will I still receive the stimulus payments? Okay. Okay, so you earn less than the foreign earned income exclusion, but chances are you earn more than $5. So you would have filed a tax return. So even though you've properly filed your tax return and no taxes are due, yes, you will get the stimulus payment. But the important thing is that you file a tax return. And earning less than the foreign earned income exclusion is not an excuse for not filing a US tax return. You earn money and the threshold is pretty low, depends on your filing category. But once you're above whatever the requisite threshold is, even though it's less than the foreign earned income exclusion, a tax return is due. So, and yes, and to answer the bottom part of the question, you can still receive the stimulus payment in the form of a rebate. So the refund, if you do a refund, is going to be a bigger refund. So next question. Can you talk about how tax brackets differ between the US and Spain, impact total taxes likely owed to both countries? Blah, 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 blah. Okay. That is a pretty tricky one. So obviously, well, not obviously, it depends on the nature of your income, because different types of income carry different tax calculations and different tax liabilities. Remember, we spoke about transfer taxes, we spoke about capital gains taxes, we spoke about taxes on passive income. Well, there are like dividends and interest. We also spoke about taxes on earned income. So it really depends, but I think where you're going and what people typically ask about is, am I going to be double taxed? If I'm just going to cut to the chase, that's what people are worried about. Am I going to be double taxed? The answer is highly unlikely once you have a team that knows what they're doing and they talk to each other. We see people getting double taxed if they approach a US tax team that knows nothing about Spain, because they think it's like a simpler jurisdiction. But no, you can't. I believe my personal opinion is that it's super difficult to do taxes for someone living in Spain, a US exposed person living in Spain, if you don't understand Spain taxes. Now, Spain will tax everything, and so would the US. So what we need to do, or what whoever is your chosen US tax team needs to do, is they need to invoke certain articles of the US-Spain tax treaty. And that's how we provide relief for most of the instances of double taxation. So in terms of going back to the question, it's kind of hard right now to give a breakdown on the difference in tax brackets because there's so many. And especially with Spain is some of the calculations, as Ricky pointed out, are super complex, right? But step back from that, it's once the team understands both sides, they should be able to work with you to ensure that you're not double taxed on either your earned income or pensions, pension income as well. Scrolling down, I am Spanish and American citizen. I'm a dual. My income is solely a government pension. Here we go. We come to pensions. I understand generally that the rate of tax in Spain is higher than the US. Yep. And then one has to pay the difference, right? But with a government pension, this does not apply. Is that true? Now, it really depends. I mean, generally speaking, you're correct. As we were saying previously, you're not going to be paid tax twice. You'll be paying the higher of the two amounts, which tends to be Spain. Doesn't always have to be, but it does tend to be Spain. And you're just going to be paying the difference. You will not be taxed twice on the pension income. Okay.
Yeah, that is correct. If you go over the Spanish-American tax treaty, if you go to Article 21.2, it basically talks about public pensions, and it says that generally they will be taxed in the US, but if the percentage is greater in Spain, you would only be paying that percentage that you are not paying in the US. So you wouldn't be paying double tax, which is what is most important.
Okay, moving down. Next question, referencing Spain. Okay, Ricky, this one is for you. Can you see it? From Alan, referencing Spain's savings income from gains from disposal of assets taxed at 19 to 23%. Does that include US traded stock and option trading gains? Is there a difference in long-term versus short-term holding period?
I mean, we would have to go over the types of incomes. I mean, you mentioned from disposal of assets. Did you include U.S. traded stock? I mean, we would have to take a look of the U.S. traded stock and see the gains, but there's a difference if they are long-term and short-term. You will probably be taxed on the short-term, and when the long-term are due, then you would be taxed on those long-term assets.
And just to kind of support what Ricky has said, Spain taxes everything. So it's unlikely that you could earn a form of income that Spain doesn't tax. So Spain's definitely going to tax it. But you sit with Ricky, or you're qualified, you're Spain qualified tax professional to work out what the most tax efficient way of dealing with it would be. But it's going to be taxed.
Yeah, of course. Before giving an answer to everything, we would go over the information given, and we would study it, and we would always try to give more than one solution to the issue or the problem. But first, we need to know what exactly we are asking. We would have to know all the information, and from there, once we have all the information, we can assess and we can give like the better advice. That's the best thing, instead of just like giving just a random answers like in yes or no. I mean, of course, first we have to study it, and then we would give you the best answer.
Okay. Next one as well, probably for you. Wealth tax in Spain, are all assets counted, including 401ks?
Okay, you mean assets above 400,000, right? It depends regarding the wealth tax that I mentioned before. It depends on the region you're living. Because, for example, if you're resident in Spain and you're living in Madrid, there's no wealth tax, so you wouldn't be paying anything on those assets. But generally, in most of the regions of Spain, you have an allowance up to 700,000. So you shouldn't have a problem with that.
Yeah. But, just to follow up on that, assuming that someone lives in the relevant region where there is a tax and they are above the threshold, we'll have to take a careful look at their various pensions to see whether or not they would qualify in that situation, right? Yeah.
Yeah.
Okay. Next one is for you as well. I have an SLU in Spain, 100% owned. I was told that I need to be an autonomo to run this company. I'm just reading it so that the recording has it, right? Because the recording doesn't pick up the chat. Is that true? Can I pay myself a salary as a director or an operator? The company doesn't have any employees otherwise. Over to you.
Yeah, that is totally correct. Because there are some laws here in Spain. The director of the company should be, well, or the owner should be an autonomous, and it should be, or maybe instead of having a salary, maybe invoicing your own company would be a better solution than having a salary. But of course, as I mentioned before, we would have to study the information provided and try to give you the best answer, because maybe, or you could either invoice your company or pay a salary, but maybe both ways would be correct.
Okay, thank you. Moving on to the next one. For the US, what level of gift can I transfer to my NRA spouse, non-resident alien spouse, without triggering a reporting requirement? I'll need to check specifically, and that number may change each year with indexing. But when you are transferring or receiving over 100,000 from an NRA spouse, then I would start looking at whether there's a filing requirement. But bear in mind that it's not going to be, from a US perspective, it's not going to be taxed. It's simply a filing requirement. Remember, the IRS just wants information, that's all. So it's pretty harmless. You're just filling in paperwork. But unless the amount is substantial, i.e., it's more than your lifetime gift allowance, which right now is around 11 million, thanks to the former administration, then it's unlikely that any taxes will be due. It's simply a reporting requirement. Scrolling down now. This one is from Josh. Hi all, I've been a freelancer for US clients for some time, but was never making regular or significant amount of income until recently when I registered as an autonomo to properly declare my taxes. Since becoming autonomo, I declared in trimesters in Spain my income made here and in the US, but there are a few invoices that are from before I became an autonomo, and I'm not sure how, if or how I should declare them. Ricky?
Okay, so you're a freelancer. I mean, of course, you would have to declare them. Probably, maybe, maybe we could add those, or maybe change the status of those invoices, and or maybe do a credit note of those invoices and re-invoice them again with your current status. Maybe that would be a good idea. But yeah, probably maybe we would have to take a look what was your status before becoming an autonomous, and see how we could add those invoices to your current status. But of course, yeah, you would have you would have to declare them. Otherwise, maybe the Spanish tax authorities could come after you. Of course, depending on the amounts. I mean, if they are pretty low, but yeah, you have to declare those invoices.
Okay. Next one for you as well, Ricky. Could you say, just for those who may be listening to the recording, could you say your email address and then type it in the box below?
Yeah, my email, I'm typing my email address. It's Ricky, RICKY, at gpasoc.com. I typed it in the... Oh, wait, I sent it just to you. Sorry. And yeah, more than welcome to answer any of your questions.
All right, wonderful. Next one. Is there software that can run simulation for US and Spain? I'll speak to US and obviously you speak to Spain. So in terms of US, the US tax code is arguably intentionally kept complex. And anytime someone comes through with an idea of simplifying it, there are some well-paid lobbyists in Washington who make sure that that's never going to happen. So therefore, the reason why is that they want you to pay thousands of dollars like I do. My software bill is pretty high. So unless you're willing to shell out at least $3,000 US for software, the answer is going to be no. There is TurboTax, but as I tell everyone, the same company that offers TurboTax offers me Pro Series and Lacert and some others. TurboTax is designed for low-income domestic taxpayers in the US. It does not have the calculations. It does not have all the forms for international taxpayers. And that is intentional. Why? Because Intuit, and I'm not criticizing anyone for making money. I'm trying to make money as well. They deliberately hold back on features that they want you to pay extra for. So in terms of a software solution, it exists, but it's going to be expensive for the US. Ricky, Spain?
Yeah, okay. Is there a software program? Regarding software programs, I mean, there are many software programs here that can run simulations here, and they can calculate your taxes based on the scenarios that you want to give it. So I mean, we have many. I mean, at the moment, in our firm, we are currently working with a pretty good program. It's called Sage. Other programs such as SAP. There are many programs that can do simulations on your taxes based on the things that you wanna give it. I mean, you can you can put many options to it, and it will give you different rates, and maybe sometimes it can give you options to optimize your taxes.
And just to add to that, because of the interplay between the two tax systems and the need to invoke the treaty under certain circumstances, I really don't see. I can see a software solution doing Spain and doing it well. I can see a software solution doing the US and doing it well, but the interplay between the two, and at this stage, before I mean, until AI is designed to make it happen, and I'm sure they're working on it, you need a human being. You need a human being.
Yeah, I mean, yeah, of course. As you mentioned, I mean, there are software that can do many things, but they are just softwares.
Yeah.
So sometimes, or most of the times, you need somebody to review the information, to speak to the other person that is from abroad, and then to come together and try to find a better solution. The
Okay.
software can give you some numbers, and you're going to be the one speaking to the client, not the software.
Great. Next question is about the refund. They just to quickly answer, because I know we're running short on time and we have a lot of questions to cover. The IRS is seriously backed up, as in seriously backed up. And there's a mountain of mail, and processing times are ridiculously long. So we advise all clients, if possible, e-file, e-file, e-file. If you're sending stuff by standard mail, be prepared for long delays. All my clients are complaining. So your check is literally stuck. E-file, e-file. Would this event be available later? Yes, we will have it available later for the person who came late. I believe the reporting threshold for gifts to the IRS is $15,000 per year. That is, yeah, certain gifts, but that's not for spouses. Spouses are treated differently. Those are the thresholds we discussed previously. A 401k retirement account is a specific type of retirement account in the US. All right, that was what I was referencing later. We heard that they were not included in the World Chats because I hadn't started drawing on them yet.
Yeah, here in Spain, of course, if you are wanting to become Spanish certified, you would have to. Well, of course, we would have to take a look of how much money you have in that account. If you have over 50,000 euros, you would have to declare that on the form 720. And of course, we would have to study what type of asset we are talking about, and then we would decide if the percentage of tax you would have to pay.
Yeah.
But of course, if that money, it's because if that money doesn't, it depends on where you have the money, because it's not the same if you have this in a company or you're receiving this money. If the individual is just receiving this money, it's very different, because maybe if it's a company, maybe it wouldn't be taxed, but if it's an individual, it will probably be taxed, and the taxes would be pretty high. We would have to see, of course, the amount and what type of asset are we talking about.
Yeah. So in other words, we'll need, or Ricky's team will need to actually see it and study it, rather than just giving a quick answer right now. David has been answered. Is it possible to opt out of paying Social Security as an autonomous? If yes, what are the disadvantages of that? Can it be reinstated later on, Ricky?
I mean, if you're an autonomous, you have to pay Social Security. The Social Security for an autonomous, you start with a pretty low rate. For example, most of the people start maybe paying 50 euros a month, and then it goes up and up. Sometimes, maybe depending on the income you're earning, you can pay a lot of taxes. Sometimes it's better if you can, regarding the employee, it's better not to be, it's better to be in regular regime rather than autonomous. Because if you're in regular regime, the employer, the company, is the one that is taking care of the Social Security payments. While if you're an autonomous, you have to be the one in charge of taking care of your Social Security payments. We would always have to study if it's better for one person to be in regular regime or being an autonomous. But for example, there are some times that you cannot be in regular regime. For example, one person that the father is the owner of the company, and you are trying to work in that company, the son or the daughter is trying to work in that company. For some law here in Spain, you cannot be in social regime, and you have to act as an autonomous. Those are some rules that are here in Spain. Maybe they're not beneficial, but you have to follow them.
Okay. Next question. How far in advance does it make sense for a typical retiree to start tax planning? We want to pay our taxes as required, but want to be as efficient as possible. In my mind, part of retirement planning is tax planning. So your choice of retirement vehicle is to a large extent driven by taxes. So the answer is yesterday. As soon as possible. Definitely. Is there any book? This one is for you, Ricky. Is there any bookkeeping software that links to Spanish banks and downloads transactions?
Yeah, there are many softwares that do that right now, and we are currently working with one of them. The name of it is called Check It. It basically downloads you give the codes or the password, like the viewing passwords, and it basically downloads all the information from the bank, and then it gives you it shows up in your accounting, and then you just need to like check that all the accounting on all the bookkeeping that the software is doing it's right, and then if it's wrong you can change it. But yeah, we have those type of softwares here in Spain.
Okay. Next question. Is there any way to e-file if you have an NRA, a non-resident alien spouse, a non-American spouse with no Itin? The answer is no, you need to get them an Itin. My team, we're certified acceptance agents, so we're appointed by the IRS to help with the Itin application process, but I'm sure there are others who are closer to where you are. So if you get an Itin, yes, you can e-file. And then next question. Let me file. Okay, someone else is asking about Itin. Easy solution. Get your spouse an Itin and you're good to go. And if you use a certified acceptance agent, not necessarily us. You can Google on the IRS website. There are hundreds of us. You can pick whoever you like. Once you use a certified acceptance agent, not just an acceptance agent, they would help you with the Itin application, and you don't need to surrender your spouse's passport, because otherwise you need to send in the passport to the IRS. If you use a certified acceptance agent, they verify the authenticity of the passport, so your spouse can keep his or her passport. And you get your Itin, and you can e-file the next round in the next cycle. Last question. At the moment, somebody asked another question. Hold on. At the moment, my Spanish girlfriend and I are planning to get married. Congratulations. I've never earned any income in Spain, but I do have a small bank account in Spain, a couple €100 with money I deposited from the US. Should this be claimed on my US taxes? Never considered it previously. With the FBARs, the foreign bank account reports for the US, there's a threshold. So it's not just one account, it's your maximum aggregate balance if it exceeds 10,000 US. So if you have €200 in one account and 8,000 in another, and so on and so on and so on, if collectively the maximum balance for a calendar year exceeds 10,000, yes, they are all reportable. Otherwise, no, they are not. And follow up to that answer, I tried getting an NRA spouse and Itin at the IRS office, and they wouldn't let me because it wasn't done in conjunction. Exactly. You need to do it while submitting a timely filed US tax return. So as part of the application, again, it's all online. Just Google W7 instructions. The part of the application package includes a timely filed U.S. return. So you do it at the same time that you're filing a tax return. Next question, with an American in Portugal, a dual, okay, in Portugal, living in Spain. Okay, so a dual U.S. Portugal citizen living in Spain owe taxes to the U.S., Spain, and Portugal if they're retired, living on U.S. Social Security and IRA investment incomes. Definitely, you're living in Spain, so worldwide income tax in Spain. You're American, so worldwide income tax by the U.S. The treaty helps to ensure that you're not going to be double taxed, hopefully. In terms of Portugal, in Portugal, you'll be taxed on your Portugal source income, as long as you're not tax resident in Portugal. And that's it. Thank you for your time.
Yeah, thank you all for coming.
Right. So please feel free to reach out to us, connect with us on LinkedIn. I'm really active on LinkedIn, and I post tax advice, not just general tax advice every day on LinkedIn, Instagram, Facebook, Twitter, TikTok, etc., etc. So please feel free to like, follow, and subscribe. Thank you very much. On htj.tax, you'll see upcoming webinars, and we're constantly doing. Have a good evening, day, morning, wherever you may be. See you next time.
Okay, bye-bye. Bye-bye.
Here are 4 ways we can help you. Number 1. Sign up for free webinars on US expat taxes and international entrepreneur taxes at www.htj.tax. Number 2. Stream premium educational videos at www.htj.tax. Number 3. Contact us for tax optimization consult over Zoom. Number 4. High net worth? We can quote for doing your US international taxes returns. Our books and upcoming event are available at htj.tax. Please subscribe, like, share, and comment below. Email us at help@htj.tax to engage us, to advise on international tax or business matters.